There's a saying that hindsight is a wonderful thing, but it doesn't have to be. In today's video, we'll be talking about all the things that you wish you would have known about interest-only mortgages. Don't get caught out, we're here to help. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftika joining us once again. For those of you that don't know, Ifti is a trained accountant and mortgage advisor who's been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
I'm very well, thank you. How are you doing, Gemma?
Oh, really good, thank you. So today we are talking about interest-only mortgages. So let's just start off, I think, by explaining what an interest-only mortgage is for everybody.
Okay, cool. As I always say, it's what it says in its tin, right? It's an interest-only mortgage, which means you only pay interest. So let's take an example. Let's say somebody has a 200,000 property and they borrow 100,000 from the bank. Most of the time on a residential mortgage, it is on a repayment. So if you have a 25-year term, at the end of the 25th term, you'll be left with a balance of zero. But with the interest-only mortgage, you only pay the interest. So your balance always remains the same. So if you borrowed 100,000 at the end of the 25th year, you will have 100,000 balance remaining to settle with the bank, right? So that's what interest-only mortgages is. So you just pay the interest and that's kind of it.
Yeah, okay. So interest-only mortgages, why would that be an option or a popular option with buy-to-let mortgages perhaps?
Yeah, so it's very popular with the buy-to-lets, unlike the residential side. Because buy-to-lets, remember, it's investment property. So the investors, they mainly want to make some gains as you go, right? So if you have to do a repayment, you won't have much of a positive cash flow compared to interest only. So for example, if somebody is paying £500 interest and £500 capital, now suddenly if they only have to pay £500, they have that additional £500 cash flow for them, right? Which they could use to buy another property in future, because they quite often people save up that money to buy another property. So that's one of the advantages you have. And most of the investors that I talk to, what they do is they buy property after property, but their intention is when it's time for them to kind of retire, they will sell off the property, take their capital gains and settle the bank, right? So that's what their intention is. So because the purpose is different, it's not for you to live, right? But it's for you as an investment. So that's why it's quite attractive with the buy-to-let investors.
And would you say then that's better for people who are thinking of sort of investing long term?
On the buy-to-let side, of course, we generally recommend to go repayment. But if you are thinking of portfolio and if you are thinking of doing long-term buy-to-let, and if you're that kind of an investor, it seemed to be working very well with that kind of investors. So therefore, it's quite attractive for them, right? So because their intention, like I said, is to save up that £500 from the example I used before over a period of time. If you save that over 2 years, you got £12,000, right? It might be enough for you to buy another property, right? So, that's their intention. So for them, it works very well.
Sure. Okay. So are there interest-only options available for residential mortgages?
There is, right? A lot of people don't know it. It's not widely available. And there are a lot of conditions attached to that, right? So therefore, it's not as popular with residential mortgages, but there is interest-only options available on the residentials as well, yeah.
Okay, and just talking about some of the things then that you may have to do with a interest-only residential mortgage, any stipulations that they might have to do?
Yeah, interest only for residential, if you go back 15 years ago maybe, right, it was widely available because interest only mortgages were connected to endowments, right? So people had endowment plans, right? So with the plans, the idea was, you pay interest only, the endowment at the end of the day, you'll pay off your mortgage and you might be left back with some money, right? But, there was a huge issue around that because a lot of people were falling short. Therefore, there was a review that was carried out several years ago. And after that review, a lot of banks were pushing people to go to repayment mortgages, and that is generally the recommended way. So that's why people are very worried. And of course, if you're trying to retire, last thing you want is a debt or to sell the house, right? So if you sell the house, you have to rent out, right? And you have no income, but you have to pay rent, right? So that can be a problem. So because of all that negative press and issues that you can potentially have, it has not been very popular. So banks have also been a little strict on that. And if you go to banks and say, I want an interest-only residential mortgage, there are a lot of conditions, right? So a leading bank says you need to have at least 300,000 deposit before you can apply for an interest-only mortgage. Or they'll say, okay, you need to have a repayment vehicle attached to it, right? A repayment vehicle may be few other buy-to-let properties in the background. So the whole intention is to make you pay off the mortgage at the end, because nobody wants to be criticized that you didn't get the right advice, that you end up with a debt to pay at the end and struggle later, right? So that's why it's not widely available, but it is available for some people who meet certain criteria.
Okay, so what would you say are the key advantages of an interest-only mortgage then?
It's mainly the cash flow, because obviously if we go back to the same example I used, let's say you pay £1,000, and out of that £1,000, maybe £500 is interest and £500 is capital. So if you are paying a repayment mortgage, you need £1,000, right? But if you are doing an interest-only mortgage, you only need £500, right? So that is the key advantage. So cash flow-wise, it's quite easy. Quite often, if people, I find, right, the interest only they pay is less than even rental that they would pay to live in the same property.
Wow.
So given that, there is a cash flow benefit for sure, right? So that's why it's attractive for a lot of people to ask for this, right?
Okay, cool. Thanks, Ifti. So another question I have is, given that there are these benefits, why do you think that interest-only mortgages still aren't very popular?
It's not popular because, like I said, there are a lot of conditions attached to that, right? So banks would say you need a sizable deposit before they can consider. And also they ask for a credible repayment vehicle. Now, what that means is they will want a pension plan maybe, right? That's one of the options. And the pension plan should be credible, and also it should have big balances. And they will want to see a track record of you contributing towards pension on a regular basis. So you'll have to satisfy those conditions before you can look at it. Also, they sometimes look at options like if you have several buy-to-lets in the background, which has equity, they could consider that as well. So that could be another option as well. But then not everybody has that, right? So that's why it's not very popular. Yeah, so they will look for that. I know people have said, look, I've got cash ISAs, I've got savings, but those are generally not considered as credible repayment vehicles, right? So that's
you
what
just pull the money out at any time, can't you, by the end of it?
That's right. That's the main reason, right? Because you can always pull out money from the ISAs, but whereas pension, sorry, you've got to wait till you sort of retire, right? So, so that's why banks give more weightage to schemes like that. So a lot of people fail on those counts. So therefore, that's why, we sometimes struggle to place interest-only mortgages for many people,
Do endowment policies still exist? Like, is that still a repayment option?
I think there are still some policies around, but at the moment, I can't see any new ones coming because there were a lot of bad press around that and there was a lot of controversies around that. So it's not really available for people who want to start new, right? But I think there are still few people around who have these policies from the past. So at the moment, you probably won't have an option on that one.
So basically, most people's only option would be using their pension as a way to show that they're...
Yeah, pension, or if you have buy-to-let properties, that's an option as well, right? So that is one. Of course, speak to an advisor because you may have a scheme which is different to what I've just mentioned. Some banks may consider certain schemes, but things like cash ISAs or savings, they generally don't work.
No, okay. So with that in mind, who would you recommend an interest-only mortgage to?
Okay, so I will be very careful recommending an interest-only mortgage, especially if you're looking for a residence, because last thing you want is you go into retirement and you have a heavy debt to settle, right? Because at that time, you can't do a second job. You might struggle to do a second job because you don't know how your health will be at that time. You're obviously a little older at that time. So I generally wouldn't recommend it to most people. But if there is an experienced landlord who has so many buy-to-lets in the background, somebody who actually is sitting on a massive pension pot, it's something I would look at, right? But my first preference would be always to settle your residential mortgage first, right? So where possible, I'll recommend a repayment. But given certain circumstances, it works for certain people. And for them, we would consider, after thinking about it a lot, we might consider. So yeah, so that's what we would do.
All right, well, thanks, Ifti. Some more great advice there. I just wanted to do a regular reminder that these points may or may not be applicable to everybody, so please do talk to an advisor if you're unsure if they're suitable for you. And if you don't have an advisor, I will leave our WS contact details below, as we're always more than happy to help. And a little reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.